So I'm going to be talking about crypto today. So if crypto isn't your thing or you don't really care about the future of money, this probably isn't the video for you. So about a week ago, the SEC filed suit against Binance and Coinbase, which are crypto exchanges, because as SEC put it, they are unregistered securities exchanges. I'll show you right now. And this is straight from the SEC's website. So why is this important? Why do I bring it up to you? Well, about 2 years ago, Coinbase decided that they were going to IPO. They're going to sell shares of their company on the stock exchange. Now, before a company can IPO, they have to register with the SEC and they have to get approval from the SEC in order to become a publicly traded company, which means the SEC is going to heavily scrutinize the company and they're going to say, yes, this is okay to sell shares of, or no, it's not okay. Let me show you that. So here's this. You can see Coinbase Global up there. So they registered to be traded on the stock exchange and they got approval from the SEC. I want you to use critical thinking here. 2 years ago, they gave Coinbase the okay to become a publicly traded company after heavily scrutinizing them and looking at their business model, looking at the types of things that they sold, and still said, yes, okay, you can go ahead and become a publicly traded company. Then 2 years later, they file suit against them for being an unregistered security exchange dealer. Now this is where it gets weird. Obviously, you heavily scrutinized them 2 years ago, and you said it was okay. Based on everything you saw from the company, you said, yep, they can totally be traded as a public company. And then 2 years later, you took it back and said, oh, wait, hold on. No, you guys are selling illegal stuff. Shouldn't you have caught this 2 years ago? And the answer is they did catch it 2 years ago. But the issue is that what they're realizing and what they didn't expect is for crypto to be traded at the volume it's being traded at today. So a lot of people are running for the hills, leaving banking institutions and going elsewhere because we're seeing people don't have trust in the banking system right now. So they want to be in control of their money. So they're moving their money to things like crypto and other institutions like Apple or, these new banks that are popping up that weren't financial institutions before. People feel more secure with things like that than they do with regular banking. And so it's this whole thing really about. So the idea isn't to crush cryptocurrency because realistically it wouldn't make sense for them to do that. And here's why I say that. Right now, banks are in a position where people are withdrawing their money, right? And they're putting them into other institutions. We need to get people back into putting money into the institutions. If not, these institutions die. So how do we do that? Well, first and foremost, we take crypto off exchanges until we understand it. Once we understand it, then we regulate it. Once we regulate it, we can allow people to trade it. Now, how does that tie into the banking system? Well, as I talked about on this channel, the new banking system is built on blockchain technology. Where does blockchain technology come from? It comes from crypto. So now, if we regulate crypto and we say, hey, crypto's okay to start trading now, and the new banking system, which all the big banks have the ability to use, right? And it's built on blockchain, that also means they're able to accept transactions like Bitcoin, which would then help them to get more people to put money into the banks, which is what they need right now in order for these big financial institutions to survive, because people are going to continue to take their money out and put it into things that they feel more secure with, like crypto. But if they can get crypto from a place like Chase, or they can get crypto from a place like PNC or something like that, the likelihood of them keeping money in the institution is a lot more likely than it is if they don't regulate crypto and if they just ban it altogether. So you got to have a forward-thinking mind in this. This is calculated. Crypto did what they didn't expect it to do. And because they don't understand it, they're going to take it down until they do understand it. Once they do understand it, they're going to regulate it. Once they regulate it, they're then going to allow the institutions to start investing and using it. Once the institutions can start using it, the consumer can now jump into the market, right? And start putting their money into things that they feel more secure with. Influx of cash for the banks, influx of money for crypto, everybody wins. So this isn't going to happen overnight. This might take 2 years, this might take 5 years. But when you start to put the piece of the puzzle together, it just makes sense that if banks are already using blockchain technology, why would we tell people that they cannot buy crypto when they feel secure in buying crypto? And we can just use it to get more money into the system itself to keep banks afloat. Kind of makes sense.